All right. The Art of Passing, the book says, the rich are motivated to create wealth so they can reincarnate back into their own bloodline and thus inherit their resource structure. This is the real secret. This is a book about trust, not an esoteric or spiritual book. Okay, but this Federation, Gwen Wyckoff, Charles Arthur, the business family composed of lawyers, CPAs, researchers, and over 30 years of trust experience. This is who wrote this. They also had a successful court defense of their two volumes trust book, which the IRS tried to force them to stop writing. Now, the excerpt that I just read to you, the IRS tried to stop this book from being released. And just that one excerpt should tell you why. Because, again, as I said, the vast majority of people cognate spirituality as one thing, when in essence, there is a whole different component that we're not taught. Anyway, the word trust is a metaphysical concept. It starts in the mind as an emotional state achieved between two or more beings, and then is solidified into the corporeal by agreement on tangible documents and audible, semi-tangent covenant. So your trust with someone or in someone starts in your brain, starts in their brain. And when you two synchronize on the terms of this trust, then you put it on paper. Okay? Now, trust, which rests heavily on the emotional synchronicity of the parties involved, it is power of the unseen things that determine the power of the seen. So the level of your trust, the level of your administration, and the level of your competency in this trust will dictate what you manifest because of that trust, quite simply. Okay, so we're just going to summarize what we've covered. The two primary trust types are revocable and irrevocable. The grantor operates differently in each type. That is, in a revocable trust, his operation, or rather his powers, are in one format, and in irrevocable, his powers are in another format. In irrevocable, he is taxable. He dictates the trust management fully. He controls all assets and can change the trust or trust terms at will. Now, of course, he can delegate some of these authorities to the trustee, but generally, in a revocable trust, the grantor has all the power. Any other trustee is subservient to the grantor. Beneficiaries have state-granted power within the trust in a revocable trust, which may include voting rights and other controls over the trust. In an irrevocable trust, the grantor gives up ownership of the property completely. The grantor cannot change trust terms at his sole discretion. He cannot solely manage the trust and is not responsible on taxes, generally, if he doesn't make a mistake. The trustee is not subservient to the grantor in an irrevocable trust. Beneficiaries have only the rights conferred by the trust instruments, so the rights that the grantor chooses to give the beneficiaries will be dictated in the trust indentures. And they generally, in an irrevocable trust, should not give any control over the trust because, as we mentioned before, when beneficiaries have too much control over an irrevocable trust, it starts to look like a partnership to the IRS, and they can move to tax it as such. Okay, Corp Sole, res principal, remember, refers to all combined collection of property put into the trust to give the trust its sum value. Now, it does not include income, which is returned from rents, interest, royalties, basically anything deemed profit. Although the grantor can put in his indentures that a certain amount of income at a certain period in time is automatically allocated to trust corpus. Don't want to get too far into that, but just for general purposes, all of the initial trust startup property is deemed the trust corpus. Situs is where the property is treated as being located for legal purposes. Okay, we went over if you live in California and have a trust that resides in New York, You may have property belonging to your trust in California, but it is legally sited in New York. Trust certificate, a document showing rights in trust assets or rights in trust corpus. Exchanger, someone who puts property into a trust. Protector, a trust management overseer, called a super trustee who works for the grantor. He is also sometimes called a mediator, because that is the basic premise of a protector, is to mediate disputes among the members of a trust. That would include a board of trustees. If they have issues, the trust protector can come in and mediate also there. Also, if the board of trustees just happens to be even for a vote, say for instance you have 4 trustees and you're voting on a particular resolution. Well, if you got 2 trustees going one way and 2 trustees going the opposite, splitting the vote evenly, the protector can come in and be a tiebreaker voter. General manager, a trust manager. Minutes, a logbook for trust activity. Now, your minutes are completely at your discretion on what you want to put in your minutes. But as stated before, and your minutes should be done at least once every 6 months, at bare minimum once yearly. All activity, all resolutions that change the structure, change the operation, change the direction, or change the mode of the trust, most definitely should be logged into your minutes. Property, assets, whether tangible or intangible, owned by someone. Beneficial interests, interest for beneficial trust members, that would be beneficiaries, certain exchangers. Capital interest, interest for exchangers, that would not be for your beneficiaries generally. It could be, but generally it's not, and it would always refer to your exchangers for the most part. TCU, Trust Capital Units, a document showing rights in trust assets. UBI, Units of Beneficial Interest, a document showing rights in trust profit. Trust versus corporation. And just briefly, trusts are capable of unifying family as family business as demonstrated by the rich and powerful families of generational wealth, not amenable to the corporate state, and are for the most part self-governed. This is why the United States has to drag these people into court to get them to, or to try to get them to adjust their practices. Sometimes they succeed, sometimes they don't. Many times they seem to succeed, as we saw earlier when they split up J.P. Morgan, I believe it was, but not J.P. Morgan, Standard Oil. They split up Standard Oil, but Standard Oil still became Chevron, Exxon, and I believe one other fuel magnate. So we can see that the corporate state is very limited in their ability to destroy these properly formed trusts. Corporations must follow corporate charter, rarely relative based, and are governed by the laws of local corporate entities. Trust has a spiritual connotation in its meaning and practice. The better you understand this or overstand this, the better you administer and the usage of your trust instrument. And that will conclude Module 4. We will proceed to Module 5.